Alan Wilson, who is an insurance broker and an underwriter as well, and he's particularly experienced in writing risk in fire safety elements. We have Ian Drennan from Willis Towers Watson. When I started, you were Willis Caroon, but now so much time has passed. And Ian is head of construction risk at Willis. We have Dr. Matthew Bell, who is from Melbourne University and also a former director of the Society of Construction Law. And of course, then we have Professor Ian Bailey, who wears many, many hats. He's the founding chair of the Society of Construction Law. He's also a professor at Melbourne University Law School, and he's a silk at the New South Wales Bar. So I thought that we might start the discussion by framing the issue. We've all heard about the insurance crisis in Australia, but I don't actually understand the details of what that actually means. And I thought I might ask Alan to tell us what that actually means in terms of the kind of policies that can be obtained in fire safety elements, the terms and the limits of cover, etc., that might be available.
Thank you. I suppose what we should start with is saying is that insurance is a real problem at the moment. It's been, and Ian will be able to back me up on this, it's been, the problem has been rising over the last couple of years. Insurance companies have traditionally just relied on making investments and then making their money out of that and not worrying about underwriting. Now you're finding that the insurance companies actually have to make a profit out of their underwriting, which they find very difficult to do. And when I mean a profit, they've got to get the premiums in, and they've got to pay their claims, and there's got to be a difference between the two. In the past, it's always been less premiums and more claims. So the insurance industry is governed by the reinsurance world and the insurance world, and basically mainly coming out of London. Now, Lloyd's of London's had a huge turnaround in the last 12 months. They've restricted business plans from a lot of the different insurance companies and syndicates there, and they've cut their capacity. Now, what that means, it cuts their capacity. If they're going to write $100 million in one class, they turn around and put their business plan in for $100 million, and Lloyd's say, "Okay, we'll give you 80." And most of the insurance companies there didn't actually know how much they've written. Some of them were probably writing 120 instead of 100, and they've been cut down to 80, so they've got to throw out a third of their business. So they're trying to make the insurance companies select profitable business. So what's that done to the insurance in general? It's pushed rates up, and rates have probably doubled, Ian, more than doubled.
2018, 50%, 2019, 100%, 2020.
Yeah.
2020, maybe 200%.
So there you go, 50, 80, and then another 200%. So if you look at what your premiums were 3 years ago to today, coupled with that, we actually have in your industry we have a world-class problem being cladding. It's a world problem. It's not an Australian problem. It's not a London problem. It is a world problem, and that's created a problem, made underwriters really, really nervous. Because of they just don't, it's the new asbestos or the cancer from cigarettes. That's what they're treating it as for future, which means they're sitting on a time bomb, and the claims are going to come in, and they haven't got enough money in reserve to pay. So therefore, they're cutting covers out and they're increasing premiums. So that's really this, and that's really through the property market. Ian sees a lot more property than what I do. I mainly see the professional indemnity liability lines. Ian sees the property lines. So it's the same with the property, isn't it, going through? You're experiencing that as well?
Absolutely. So the perfect storm that we're seeing in front of ourselves in respect of professional indemnity insurance is just a part of a global change in the broader insurance market cycle. Like the economic cycle, the insurance cycle runs from boom to bust on average over a period of 8 years between the trough and the peak. As insurance buyers in Australia for the last 11, 12 years, prices have been continued to drop and reduce with covers expanding, which means the premium reserves that insurers have to pay out of claims have been diminishing, and they've been, as Alan said, relying increasingly on the investment income to meet their shareholder return objectives. So in 2016, the global insurance market started to turn, led by the property insurance class. But professional indemnity and directors and officer insurance caught up very rapidly in 2018. And those two classes of insurance are the most acute class of insurance on a global scale. Now in Australia, design and construct professional indemnity, whether you're a contractor or an engineer or a consultant, as far as Lloyd's of London, which is the largest private insurer in the world, that is Australian PI risk is the second largest loss leader out of all of the risks they write globally, be that marine, construction, motor, property. There is a real problem for Australian risks driving claims activity for Lloyd's, and that's being replicated by other markets. When Lloyd's catches a cold, the world sneezes from an insurance perspective.
So have the two of you seen your insureds not be able to get insurance and then go out of business? We're talking about engineers.
From a going out of business perspective, not, but the trend for the last 11 to 12 years, as we've enjoyed unprecedented levels of softening market conditions, means that prices have dropped and coverage has expanded to be incredibly broad. And then the opposite's now happening, but it's happened in a knee-jerk reaction. It's taken 12 years to get to where we are, and it's taken 2 years to get back to where we were. So by that, coverage has been restricted. Most acutely is in respect of non-conforming building materials, whereby in 2017, insureds started to see, especially if they had a prior negative claims history in the area, an exclusion coming in whereby claims arising out of the lack of or the failure to adequately execute their professional services in contract, whatever it may have been, would be excluded if the claim arose out of the use of or the incorrect specification of building materials, or indeed the installation of those materials in a compliant manner.
So you said before when we were discussing this that even if at the time of the certification the products were within building practice, if subsequently when the claim arises, maybe 5 years down the track, 10 years down the track, and at that time it's determined that those products shouldn't have been used, then is it correct that the exclusion clause would then apply to deny cover to the engineer?
That's correct. Insurers are taking a very definitive position on this, and the exclusion is if at the top. If I take a step back, PI insurance operates on a claims-made basis. So it's the policy year that the claim is made is the policy that responds. The exclusion that is being included under the insurance policies says that if at the time of the claim the building materials specified or installed were not in compliance with legislation, the claim will be denied. It doesn't take into account, it doesn't matter to insurers whether at the time of specification or time of installation the materials were in compliance with legislation of the day. If legislation changes, which it does tend to change quite rapidly over a period of years, the exclusion doesn't take that into account. So what you're doing today may not be compliant in 5 years, but your exclusion will still prevent you from claiming under your insurance policy.
So, Ian, did you want to make a comment on how the Victorian government has dealt with the cladding crisis?
I was going to touch on two issues about legislation. We understand there are the conflicting bills, there's Yasmin's bill, but I can tell you that the Design and Practitioners Act bill is as scary as blazes, and you can explain one of the reasons why that is, because it's personal liability attaching to the individual who performs the act, and that will stick with you for 10 years, even if you no longer work for the company. So I think, Alan, if you could explain.
So what Ian's referring to there is that, remember earlier in the day in the presentation, someone said there's a duty of care coming through. Now that duty of care is actually already here if you're registered with the Building Practitioners Board. So the new legislation is going to mirror that. And what it means is that you as an individual pick up the liability. So from your professional indemnity point of view, whilst you're working for your employer, the employer's PI policy responds. Now, this is New South Wales based only. Okay, it's no other state except New South Wales yet. So, yeah. So when it says that the employer is going to pick you up, what happens if you, first of all, change jobs? So if you change jobs, and your liability, the statute of limitations is 6 years, but this is because it's government-based, they're going to run it for 10. So your liability is for 10 years, not for 6. So if you switch jobs, let's say you switch jobs after 3 years, your liability for that job doesn't, and it can go with you to your new job. Now, the Building Practitioners Board and the new legislation is all about protecting the consumer, the building owner. So you end up picking up this liability. Now, if someone sells their business and you've left, or they retire, or they go out of business or go broke, you as the employee still pick up the liability. So you're picking up the liability for your boss, even though he's out of business. So he's clear, he's gone. So let's say you leave the industry after 5 years, you've won Tats Lotto, you've married into some good money, and we've got a Grenville, and you're the fire engineer. Guess what?
Can I just comment? I think the thing is that this was touched on by Bronwyn Evans and Nicola Grayson. It's pretty scary, and it's one of the most dreadfully misconceived pieces of legislation I can ever imagine, but it's a knee-jerk reaction in the Department of Better Government or something. But I can tell you about something else that's recently happened that touches on the same sort of issues. It's in Victoria. The government has recently passed what's called the Cladding Preservation or Rectification Act. By this act, the government has set aside 800 million, 600 million to rectify residential buildings that have cladding problems. They will then take a subrogated right of the owner to sue whomever is liable, which means that the government now will have the power of the consumer to pursue engineers, architects, engineers, designers, and to the extent that it's cladding may come into fire safety. I think one of the comments that was made earlier today, or when we were discussing this, the fire engineer on Grenfell is the target of a big insurance. He's got £2 million in insurance, and the £2 million pound.
And the underwriters paid. So far, they're trying to defend him to stop a precedent happening. So that underwriter has paid out £25 million so far in legal expenses to save £2 million, and they've paid out £25 million to protect the fire engineering industry. So if they go down, the fire engineer loses, it's going to it's going to set a precedent. So that's what's happening currently in London at the moment.
But then to reflect though, some people would say, and I think my first reaction to this cladding rescue bill in Victoria was that it's good public policy. The government assumes the risk, but what they've done is they've taken the right of subrogation. In other words, they can sue the Commonwealth Government for being responsible for its import of this flammable material, the architects, the engineers and others who have professional indemnity insurance in association with those developments. Can I now then just drift into something else? I have, for quite a few years, been fighting about reform in New South Wales, and the problems that we have with buildings, residential high-rise buildings, is extraordinary. And the Commissioner this morning mentioned the fact that a problem is insolvencies. I heard of a case recently in the Supreme Court in New South Wales. The owners' corporations of 5 owners' apartments were seeking to restrain the transfer of money from a development company out of the country. It was at 14 million. There was the profit, including the GST that hadn't been paid. It emerged, it was all too late, the money had gone to Europe, and there had been 100 companies wound up by these directors. Why hasn't the Commonwealth realised that this is costing the state government $200 million a year. It's costing the people of Australia millions, and they won't do anything about phoenixing. It's not just a state problem. This is a Commonwealth problem. My view is that the Commonwealth has to recognise that the cladding issue is a big issue of insurance. It's the absence of proper protection, and they have to look at because no insurer is going to pick up a risk like this. Am I right? Yeah.
That's absolutely correct. So, let's not forget, it is a commercial insurance market, all beholden to shareholders, and shareholders expect their interests to be protected and wealth expanded.
Yeah, so in the Designers and Building Practitioners Bill, it requires all builders and developers, all builders to be insured.
Developers are let out.
Yeah, builders have to be insured. So, Ian, can you comment on, I'm not sure if you're familiar with the bill, but what's the likelihood of builders being able to get the type of insurance the New South Wales government envisages in the Designers and Building Practitioners Bill? And also the fact that...
And I think we should add to that, because we've been talking, of course, about this statutory duty of care.
Yes.
And as Nicola said this morning, it is, as currently framed, to be retrospective during the relevant limitation period, which I assume is the 10 years under the Environmental Planning Assessment Act. So, if we might add, what are the chances of people who have already done the work to then get, I don't know, an extension to their policy, to then cover this retrospective liability for that 10-year period, which may have already started running? Is that too hard?
No, I'll give it a go. So if I was a fire safety engineer and I decided to shut up shop because it was just too scary for me to go ahead, I would have to buy a run-off cover, which would give me the requisite cover bit 7 or 10 years, whatever I'd signed in contract historically. And I would go to the commercial insurance market and they would say, we'll provide you with your run-off cover, but it will include an exclusion for non-conforming building materials, either specified or installed incorrectly against warranty. So that would be an exclusion. That would be a balance sheet risk to me and my mortgage and the like. And that's the reality that we're facing, because it is not making money for insurers. They have come to a realisation that they cannot continue to be losing money on behalf of their shareholders. The largest commercial insurance market in the world, Allianz, pulled out of Australian risk in respect of professional liability and general third-party liability in August 2019, because the board in Munich realised that they just could not make money in Australia in the long term. And that sent shockwaves through the global insurance market, and that spiked PI insurance premiums even further, because there is seen to be opportunity there, but opportunity within the realms of the restrictive cover that's being provided. When we're discussing with underwriters on behalf of my clients, which range from 50 to multi-billion-dollar turnover construction companies or engineering companies, the underwriters will routinely say to me, I will not lose my job for refusing to write this risk. I might lose my job if I write this risk and it goes wrong.
So that's in the context of engineers trying to get insurance with this exclusion clause, but the Designers and Building Practitioners Bill, I think, envisages that all builders themselves also have to get insurance. So would that be in the realm of construction all risk policies? And would that have those same exclusion clauses?
So a builder's contractor's all risk, it does provide quasi-PI cover as the head contractor under the defects exclusion, where it writes back. It covers damage arising out of a defect, but the trigger for the policy is damage. The mere presence of a defect is not sufficient to trigger the policy. And therefore it would fall, unless there's resultant damage arising as the proximate cause of the defect, the contract works policy would not respond.
Yeah, and I think this isn't the audience, but we all live in houses, of course, and many of us live in high-rise apartment buildings as well, some of which might have dangerous cladding or other things on them. I was speaking with an audience at Oxford back in September, and they were mostly residents who'd been faced with these types of issues, and we've already started, and you know what a legal minefield it is to try and unravel this so that the rectification can occur, which is, after all, what we all want, I think. And hence, I think from the Victorian point of view, and I'm not necessarily here to fly the flag from the south of the border, I think that the Victorian government came to the conclusion, Ted Baillieu and others have said this, that the only way in which, within a timely manner, this rectification is going to be funded and occur is if the government steps in with taxpayer money. And I suppose the next step to that being, logically, that from the revenue perspective, taxpayers want to get that money back. But it will be a very interesting thing over the next few years, whether the Victorian government actually does pursue the so-called bad apples who've been involved in this. But we do need to say, from a legal point of view, that we are kind of, in this discussion, jumping over liability. In other words, there will only be a trigger on a policy, payout of damages or whatever else, if there is in fact liability, and that of itself is, at this stage, highly ambiguous. We have, as you know, the decision from VCAT last year, the Victorian Tribunal, which was heard by a county court judge, about the Lacrosse building fire in 2014. Many of us in this room were involved with that. And it's on appeal. But you know the headline from that ultimately it was the design and construct contractor was liable under the breach of warranty, the statutory warranties, but through the proportionate liability scheme that we have in Victoria, and you have here in New South Wales and around the country, was able to then pass that liability on, apart from the 3% ascribed to Mr. Gabita, who had his cigarette in the plastic container. 97% of that was ultimately passed on to 3 building consultants, fire services engineers and others. And that was through the finding by Judge Woodward that in fact each of those was in breach of duty. So these are very finely calibrated liability issues, and so we all have to be looking at this stage to what the appeal says about those liability issues. Who knows, maybe, I don't know, maybe LU Simon as the DNC contractor will find itself having to contribute. Maybe on appeal we'll find that those consultants were not in breach of duty. So it's that liability issue of itself before we get to the issue of funding and damages up in the air.
Can I just pick up on the issue of the design and construct model and what damage that has caused and how significant that is a component of the problem we have. The typical model of a not particularly reputable property developer is that they would buy a plot of land with a development company that sounded different to the company which was their building company. They signed a design and construct contract on the basis of development application drawings. The subcontractors designed the building, the subcontractors built it. 3 months probably before the project is finished and a PCA, occupation certificate's issued, one of the directors, I think you might find, was appointed as the contractor superintendent, and eventually the company goes into liquidation. 3 months after the occupation certificate's issued, GST isn't paid, and let me explain to you, the law was changed so that the developers could hold on to the GST in these circumstances. And so the hundreds of millions of dollars that have left the country because it was built under a design and construct contract, because there was no participation of architects and engineers in the process, it's a large part of this problem. And until the legislators in this country understand that if we're going to have residential buildings built, you've got to do it other than by a design and construct mechanism. You've got to have professionals involved, and if you're going to have fire safety measures, you'll have to have a fire safety engineer. And I think one of the other areas that I can see a huge amount of money that is waterproofing. The standard waterproofing contractor in New South Wales had 5 words of English, a bucket and a brush. and he'd sign whatever you wanted him to sign when it came to a certification about compliance with the NCC that simply says you shouldn't let water in.
Ian, while you're there, could I get you to make comment on the Design Practitioners Bill, which calls for the build to self-certify at the end of the project that he has built in accordance with the plans and specifications. It doesn't address, the requirement to have consultants inspect and certify the building as during the construction process. I know you and I did a submission to the government, but they ignored us. But could I get you to make comment on what you think are, how effective, if at all, if the Building and Design Practitioners Bill is implemented in trying to lift the quality of buildings in...
I don't think it'll make any difference at all, and I don't want to particularly get political about this, but where did the money for multi-storey apartment buildings go? To the developers. Are the developers being asked to pay? Are the directors of these companies that have wound up hundreds and hundreds, are they being asked to pay? And I think if in fact the bill works the way it is at the moment, the person who does a little inspection on fire services will be personally liable for 10 years and they will not be able to get insurance.
So, Alan, could I get you to just frame for us the risks that you see facing a fire safety engineer? I mean, the risks that you take into account when you're considering whether to write the risk.
We write fire engineers and not the other engineers through our fire scheme, and we've got a market for cladding as well, so we can actually write cladding for them. But the risk is what's going to happen in the future, and the risk is what's coming out from behind. We've already had some discussions, Ian, with some people that were in government in Victoria, and they said, yep, we've given the money out, but what we're going to do, we're going to hold the fire engineers responsible because we know they've got PI. Just one of the risks I would suggest that you all do is that cladding's what's called as a worldwide known issue. What I would suggest to every one of you to do before your insurance PI policies expire, notify your underwriters that you may well have, over all the years gone by, worked on a building that's had cladding in it, or that you've worked with some cladding or some inferior building products. The reason why I say that is that every renewal that is going to come up from now on is going to contain a cladding exclusion. So even if you renew with your same insurance company, because it's claims made and the policies are replaced every year and not renewed, that's a real key difference. They're not renewed, they're replaced. So even though it might contain the same policy number, it's replaced. It's a new contract each year for that. So what you do is you've got to tell them this year, I'll come to you, what you've got to do this year is advise them, because it may be 10 years or 9 years down the track that the cladding issue comes back up. It could be the Victorian state government coming to sue you for $1 million for a job that you've done. And the only way it's going to get paid is if you've notified the company today along the way before your policy expires, because once it's replaced and renewed for the next year, there's no cover going backwards for cladding. All right, so that's a really important issue or point to take.
Because if you notify a circumstance that might one day lead to a claim, and if the claim eventuates, then basically under Commonwealth legislation, the Insurance Contracts Act, it pulls that claim back into the year where you first notified. Yes,
and to that point, Mark from MCD Fire, I raised this with my broker almost a year ago, whereby I was asking them to clarify the definition of cladding. Now, currently I have no exclusions on cladding, but they have a definition of cladding, and it effectively means an external wall of a building of any description, not combustible. So first of all, I asked them to be definitive on non-conforming, non-complying, all that jazz. And because I had no exclusion and the deadline, it was the 20th of June, and this all went through. But I'd said, based on your definition, I'm better off in declaring 100% of my projects, even though cladding represented 0.005% of my total revenue in terms of building audits, to say you got bad cladding, you need to take it off, and my premium went up 20 times what it was 2 years ago. I'm better off declaring 100% of my projects over the last 8 years that I've been in Australia as possibly being the subject of a claim within the next 10 years. Yep. And their answer was, Mark, I would never insure you if you made that a declaration to me, because that's just bad faith.
Mark, I think you'll find that broker may have a different change of heart today, because it wasn't until about September that the major insurance groups issued a statement to say that it's a worldwide known circumstance. So the industry now is treating it as a known circumstance, and you will find that, and you're right, with the cladding definitions have changed because concrete's cladding, wood's cladding, glass is cladding. Yeah. So what in our policy, what I've done is written a definition of combustible external cladding to make sure that it'll fit into what we're talking about for the faulty building products. But you need to notify that, because if you just, the other thing not to forget is the contract is not with you and your broker, it's with you and the insurance company. He's just the facilitator of the contract. So if you get something, get it in writing so that he's got it back from the underwriter so you can see it and get the definitions and that. My advice to you is notify. And it's not that you're gonna get a cladding exclusion anyway. But
I would totally 100% agree with you, and especially as fire engineers, we spoke about it earlier today, we're pigeonholed into specific departures from the DTS provisions. Yep. And quite often it's in existing buildings that may already have cladding in it, and it's a travel distance in an office that you're not even looking at cladding. And the hardest questions with the insurers is that if there's a claim, you're in the pot. So if you are a fire engineer with insurance, 100% declaration of a possible claim is the only way to do it.
And that's great, and I'd like to think that everyone has made those declarations, will do before their current insurance policy, PI insurance policy expires, but that won't fix your activities going forward, because you will not be covered. You're covered historically, but going forward, it's still going to be a problem.
Yes?
Yeah, so for those of us who have done what we've been told, we've brought out our debt, we've paid the 7-fold increase in PI insurance last year and the 3-fold the year before, and now we're being told we need to accept an exclusion on cladding. Surely the premium is therefore going to drop 20 times for the next renewal. In a rational economic world, that would make sense. What do we get back from this industry that we're paying, in some cases, $500,000 a year for? I'd rather keep that money.
Yeah, and you might you may self-insure too. There's still some companies out there that do offer cladding cover at reasonable rates.
Who are they?
I'm one of the underwriters for it, so yeah. So don't forget, in New South Wales and Victoria, they've passed legislation to say that you don't have to have cladding cover under your PI and you can get registration. But what they haven't told you is that you're still responsible. Okay, so you can get your licence, you can trade, but if something comes up, still on you. And I agree. There's been some horror stories out there about PI insurance and the rates. The industry has, as Ian said before, we account for probably 1% of the world's premiums in Australia, and we account for 5% of the world's claims. So that means we're at a loss ratio, huge loss ratios in Australia, and PI is a major loss ratio, and that's what's the market was so cheap it should have been gone up. There's someone with a question up there.
Who has the question?
Someone had a question.
Did you?
Yes. I suppose going back to that point you make there is that we've been identified as a relatively small market with a large risk. David Chandler was here this morning talking about some of the proposals New South Wales putting in terms of a building star rating and various other things that's going to bring the insurance sector back. My question is, will it? Will the insurance sector ever return to Australia if this is essentially the low market we provide and the high risk that we obtain?
Might get Ian to answer that.
I think, given time, yes, it's not going to be in the next 24 or maybe 36 months, but investor greed will always win out, and that's why the insurance market is cyclical, much like the economic cycle. And there are already insurance markets in Australia taking advantage of the high premiums, markets that weren't interested in design and construct PI 2 years ago but are now coming in big. but doing so in a more controlled manner with the requisite exclusions in place to make sure that they don't get hit by the markets that are starting to pull back and have played longer in the Australian D&C PI space.
Okay, I think it's a good segue. Matthew, could you tell us about, from your point of view, what regulatory and legal reforms you think might be needed to help us improve our building quality and fire safety design, performance of buildings?
Yeah, look, I've really enjoyed today, and thank you to the Warren Centre and to everybody. I mean, this is my 31st year of being educated as a construction lawyer since I started my law degree, and I think and I have, as Laina just said, just finished my PhD. So, how long have we got? So my PhD was about residential construction regulation to try and ameliorate the risks to residents of buildings in Victoria and in England. But it's not rocket science. Sorry, I don't know how difficult rocket science is really, but it sounds pretty difficult to me. The sorts of things that have been mentioned right through today, the sorts of things that Hackett has talked about, the sorts of things that Shergold-Weir has talked about, the sorts of things that David Chandler talked about this morning, all have very common themes. They're all directed towards prevention rather than cure. And when we talk about prevention rather than cure, from a legal point of view, that's not necessarily our natural space. You know, we tend to like to be talking about where liabilities might lie, how you can make claims, all those types of things. So for me, my education process has really been about thinking about how you can avoid these things from happening in the first place. So, spoiler alert, my thesis concludes that the types of reforms that are going on, or at least are starting in the UK, towards having a building safety regulator are important. The types of things that are happening to a certain extent here, in Queensland and in Victoria, by way of having that regulator in place who is able to get in and actually inspect things before things get covered up and all those types of things, is a very important element to it. But everything else that we've talked about today is absolutely vital. And I think what's really come through today is competence, assurance of competence. And so I found the discussions from an academic point of view really very interesting, and particularly from the point of view of us in the academy and trying to think about how we might, as we've discussed at some length today, try and satisfy this need for hundreds of thousands of competent engineers and other construction professionals in the very near term. So this is not a regulatory issue as such, but it's going to be absolutely vital to restoring confidence. So I suppose I haven't quite answered your question, no, Laina, but I think from my point of view, it is really about education. And from my point of view, as somebody who started learning to be a lawyer 31 years ago, the big thing that I've been learning is what Ian was talking about before. So I entered commercial practice very much with the mantra that if you are drafting a contract, then you can, by way of contract, and this is pretty much what we teach our law students as well, you can, by way of contract, sheet home any potential liabilities and responsibilities to somebody else down the train. And that, of course, leads to design and construct. So in terms of my education, the thing that I've been listening to most is, of course, the BBC's podcast about the Grenfell Tower inquiry, which I highly recommend to everybody. And the one they brought out on Saturday, of course, was talking about these design and build issues, which the counsel to the inquiry, Richard Millett, last week described as, you've heard it all, a merry-go-round of buck passing. And they're going to be dealing with exactly the same issues as we've been dealing with for years in this design and build context, and indeed was the context for lacrosse as well. So simply from my point of view, when I go back to teach my law students next week about construction law, and it comes to having a very simple diagram that says you can have single point responsibility as between the owner and the contractor, and then sheet all that liability down into the subcontractors, the consultants, the fire services engineers and others. I think what I really need to say to my students is that we as lawyers need to take a step back and actually start listening again. And so that's why I'm really glad I've been here today. Ashley?
I have a question. We heard comment on the first bill that passed the lower house and went to the upper house and was withdrawn. The second bill is the professional registration bill.
Yes.
And it's more along acknowledging that there's this special class of people that society should designate as engineers. They have certain training. That training is unique.
Yeah.
I wonder if the panel might comment on the second bill. Yeah, the professional engineers registration bill of New South Wales. I have to confess that the penny didn't drop until we had a conversation about a week ago that the bills were distinctly different. Go look at the other bill, realize which party had put Bill 1 forward, which party had put Bill 2 forward, and the similarities perhaps, or similarities or differences between the New South Wales bill and the Victorian bill or the legislation that's in Queensland now. But I'm just asking for comment on this concept that society acknowledges a special class of people that have a higher level of training and they're special.
Yeah, I think there was a comment made about this, and I think it'd be, you were speaking on behalf of EA, weren't you? Yeah, and I think if you can explain what Engineers Australia think of the
That's shout. Yeah, so it's the whole dynamics of the way that came about, I think, was very interesting. And the outcome just before Christmas, where government, I suppose, basically they hit pause and very heavily. It's the first time in, I believe, 25 years the situation has come about where they haven't just killed off the bill. So the government's original proposal were very narrow indeed, incredibly narrow, almost meaningless, I would say. And there was an awful lot of conversation and consultation went on in that space. And the situation developed very quickly. I mean, way quicker than, I suppose it took 7 years to get to the point in Victoria. It took about 7 months in New South Wales from get-go. So it really expanded into a much broader piece. And the real sort of curveball for government at that stage was the private members bill that was put up. Now, the private members bill was very heavily modelled on what's RPEQ. So it wasn't quite a copy and paste model, but if you took Queensland out and put New South Wales in, you were getting quite close to the mark in that space. So it's proposing wider than is already in place or being since it's gone from a bill to an act of Victorian. So in Victoria, it's a narrower model in Queensland that is broader than we've got in New South Wales. So of course we don't have anything in New South Wales.
Yeah.
So that model in Victoria is across sort of 5 areas of engineering practice. The opposition bill, which I suppose serves the basis for the upper house's inquiry at that time. So the two of them are running in parallel. The difficulty comes in that the government's bill is being debated, it's being passed back into the lower house, and then there's an inquiry happening up here. And they're both going to come to a point in time round about March, where the government will probably pass its bill through the lower house, but we don't, who knows?
Can I just clarify? When you say there are two bills, are you referring to the Designers and Building Practitioners Bill, which is currently stalled, and the Professional Engineers Registration Bill? Those are the two bills you're referring
and
to?
And that's Yasmin's bill.
And the government's looking to reinvigorate that conversation on their bill, which is the Building and Practitioners one, February, March. It's currently stalled.
Yeah, but they're completely distinct, though. I mean, I've read both bills.
Yes.
They're completely distinct, and they work together. They seem, I mean, they don't, there's nothing inconsistent with each other. There's no reason why the Professional Engineers Bill shouldn't go through. And to me, from my point of view, it seems to be the way to ensure that there's a minimum competence for engineers and they get educated and get the...
100% correct.
Yeah.
I think. But the feedback from government, should I say, is that they're a low legislative government anyway, and you would think it would be legislatively efficient to have one professional engineers registration bill and an act, because you would have all the problems with overlaps and, dare I say, the phrase underlaps in terms of the different bits of legislation as well. But government does not have the appetite for that. And they've kind of come back from that. So they are very heavily focused on getting the building practitioners one route.
But doesn't that feel like a political...
So the counter argument, and I'm not going to make the counter argument, and I'm not going to make the counter argument as a proponent, but I'm just going to state what the counter argument is that anytime you have an economy and you have a group of people who have exclusive privileges to operate in a domain, then there is that exclusion raises prices in the market. And so from an economics and public policy question, someone who is a Milton Friedman free market libertarian, let's monetize everything and let's drive it down to the very lowest cost, that person would argue against any kind of professional scheme like the Law Society of New South Wales. I don't know what the name of the Doctors Medical Society of New South Wales is, but Milton Friedman would not want any, let the market decide, let the insurers decide, let the lawyers decide where the liability is, no exclusion, everybody can do anything, and that is probably the situation that London and Grenfell got into. I just looked at the podcast, it's episode number 115. I've downloaded the 44-minute episode and I'll catch up on it, but I suspect that that's why we're in the state we're in.
Can I just say, though, the Building Practitioners Bill involves a complete lack of consultation with insurance. There is no company that is going to provide the insurance that the government wants.
Is that right, Ian?
Well, they didn't consult.
No, I meant Ian, the insurance.
It's certainly getting that way. So Alan has a scheme which is specific to fire servicing engineers, but there's a multiple of certifying engineers in different disciplines in the building trade that do not have that luxury. But Alan's scheme is backed up by 4 insurers in London. It won't take more than one of those to make that like a pretty scary place to be, and we would potentially be on the verge of having to go down the self-insurance state government role, like the builder's home warranty situation we find ourselves in Victoria and New South Wales.
That's what I think, yeah.
The lack of insurance.
Correct.
Yes. But do you feel that if the Professional Engineers Registration Bill went through, would that affect the way insurers looked at writing the risk for engineers?
Over time, yes. The latency of claims is the issue. Like, it's being claims made, anything that is within the statute of limitations can still hit insurers going forward. So what we fixed today, insurers will still be wary for another 7 to 10 years of what's been in the past, which is a shame.
Okay, I'll ask you, Mr. Bailey. So what do you see, not necessarily from a regulatory or legal reform point of view, what do you see as being necessary to really lift the standard of residential building? Because mainly the issue is residential building. It's not commercial buildings that we're seeing the problems in.
Well, I know it sounds a desperately simple answer, but these issues, consumer protection, insurance and lack of insurance, are Commonwealth problems. The Commonwealth has statutory power to deal with insurance under the Constitution. It has had power to deal with consumer protection. I believe that the only way these problems are going to be resolved is if the Commonwealth government recognises it's got to have a role in providing a fund, a rescue fund, and set up an insurance scheme, a decennial scheme of some form, which they will eventually flog off to the market. But this is a huge economic crisis facing this country. If it's 600 million in Victoria to do the cladding, it's the tip of the iceberg. And if you think of the problems with, I don't know whether any of you have been out to Breakfast Point. I don't think there's a single building there that doesn't leak. I've got a photograph of one fellow who had the problem of the water coming through the wall, so he just cut the carpet back, put a little row of mortar along, and he just vacuums it up every day it rains. There's a little strip of water, inbuilt drainage. So anyway, look, unless we've got to have national leadership on this, and I'm afraid unless that happens,
It's not going to happen because in December I had the pleasure of meeting with some ministers of government down in Canberra to see if we could get uniform legislation to implement the recommendations in the Shergold Weir, and they all basically said it was a state issue. Basically the way Scott Morrison behaved when the bushfires happened, and he said it was a state issue.
Climate change.
Yes, that's right.
yeah.
Yeah, but Mr. Drennan, Ian loves the concept of decennial insurance. What's the likelihood? Maybe you could explain to the audience what that is and the likelihood. Do you see Australia as maybe one day implementing that kind of structural insurance to ensure the integrity of buildings?
Yes, I don't know the full history of it, but it originated in France given the name. But any builder, certainly from a residential perspective, must take out insurance in France to cover it for defects for up to a 10-year period.
The structural defects.
Structural defects, yes.
Catastrophic failure is the 10 years. It's usually just 2 years for paint peeling and leaks and things, but it's 10 years. But it's been in France, and as I understand it, because the insurers have the economic risk, they make sure there is compliance. They have trade education, and they take personal guarantees from directors of development companies, and it works. If it's between 5 and 12%, cost of construction is the premium. The way it will work is that the
Huge, Ian.
5% of the cost of construction.
That's their profit margin.
Look,
They'd love a 5% margin. It's
in
more like
New South
3%.
Wales, the cost of rectifying, you look at the Latham, the cost of rectifying most of the apartment buildings in New South Wales is way over 20%. I know of an apartment building which is going to cost $7 million to fix the flammable cladding on the outside of 48 units.
I think it's actually a really good segue into something Alan mentioned earlier, because the reason that Alan is able to provide his clients with the cover without the exclusion is because the policy wording is very specific about the warranties that his insureds must meet in order for cover to be provided. i.e. the warranty, if they breach the warranty, there's no insurance, full stop. So that drives discipline and drives the sort of the positive outcome to do things the right way.
So Alan, just in relation to that, at the moment we don't see the fire safety engineers having a very big role during the construction process. Would you like to see fire engineers getting more involved throughout the whole design and construct process?
Yes, and the answer is yes. I think what will happen if you do that, and if you've got a right from the start, someone made a really good point in one of our discussions before that it's clients versus customers, wasn't it? Yeah, that was a great point, because I think most of the fire safety engineers, they get to do deemed to satisfy, which means you're fixing a problem afterwards. If you got in at the grassroots level, you're not going to have a deemed to satisfy. You're actually going to design something straight through, and I think it'll work a lot better. That will then stop the claims coming in, and we do get the claims because the deemed to satisfy is whose opinion. And
can you explain what deemed to satisfy is?
well, alternative designs. You then turn around if it. Matthew Wright said it before, like if something is 5 metres out, oh, well, that's not too bad. We'll put something in, we'll put an extra fire extinguisher or extra hose for you rather than putting in a sprinkler system. So instead of spending a lot of money, you'll design something that'll save money for the developer and it gets signed off and it's outside the building regs. So if you work with them right all the way through, the insurance industry are less likely to see those PI claims that result from the deemed to satisfy provisions.
So the insurers might be able to help achieve this, because if you make this a condition of the insurance that you write for car policies requiring consultants to be involved during the whole process, then you could actually drive that change through. What do you think?
Oh, there's historical precedent, absolutely. In the early 90s, the global tunnelling industry was running at a 500% plus loss ratio. and the insurers threatened governments to pull out, and governments can't build billion-dollar tunnels without insurance. So they introduced the International Code of Practice, which dictated the minimum levels of risk management that had to be deployed on site. In the early 2000s in the UK, similar legislation led by insurers was implemented in respect of timber frame residential construction, mandating the minimum levels of working practices on site. So there is precedence.
Yeah. I think just one last. I think there's two questions. Can I take one from Owen? But the gentleman behind you first, because he's been.
Could I just,
very
while
patient.
you're handing up the microphone,
He's got the microphone.
Sue Eddy this morning said, "I'm here to wake you up." That was what she said in the very first sentence. What I was fearful was that we were going to be here to put you to sleep. By the grey looks on your faces, I don't think we put you to sleep. Anyway.
Yeah, can I just take
Yeah.
Yes.
Graham Douglas, Western Sydney University. I just wanted to ask a question which is related to the PI insurance, but in the shift to the bushfire space. And that is, the bushfire space is poorly regulated with practitioners and professionals and everything else. And historically, the Insurance Council of Australia have stood up at AFAC conferences and said, losses from bushfire are great business. We like people to lose their homes because that means people will insure or upgrade their insurance. Do you think that attitude is gone and we're actually looking at a situation where we, in the light of the professional indemnity insurances, we actually need to shift so that the insurance industry is participating in the whole of that community safety area, including natural hazards?
I can answer that one. I don't believe that comment at all. I've worked with the Insurance Council of Australia. I've just finished a month working in the bushfires for East Gippsland, doing on emergency relief and also giving it advice on insurance. And I did about 200 claims for anyone in the Black Saturday fires. Not in all of those claims, there was not one person that was adequately insured. I can tell you in the East Gippsland fires now, we've done a survey. It's 40 or 41% of all homes are not insured. Not insured. The state averages for Australia are about 44%. So you get nearly, it's too dear to insure. So no, I don't believe all the comments that what they're saying along the way. So, and it's not people. I handled the Hazelwood mine fire with all the ash cover, which was excluded from the policies. I went and got the insurance industry to do an ex gratia payment of $5,000 for every household in Morwell, which was, I don't know how many thousand there were. Those people, they weren't insured with us, but, their insurance companies didn't cover it, with some of the insurance broker ones did. Yet, we're now 3 or 4 years later, those people have still got bought policies without that cover. So they haven't learnt. And
Yes, the question, though, Alan, is one of, is the insurance industry now prepared to engage in actually how we get that better from a community safety point of view, as opposed to just a hands-off look at the insurance?
If we return to PI insurance question and point, I'd say they're less prepared to engage. They're actually retreating.
Okay. Owen, last question.
Thanks. I got a little confused about the point of the economic interest of the insurers driving sensible management of the risk. It was suggested that that's why the French scheme works. And that sort of makes sense to me, but, for the PI issue and the property damage insurance issue, the insurance companies were bearing the economic risk there too. And we haven't seen sensible management of the risk. What am I missing? What's the difference between the two that's going to drive force the insurers to drive sensible management of risk, where in the Australian context, clearly that hasn't happened?
But are you talking about disennial liability?
Yeah, it was in relation to that where it was said, right, well, because the insurers are carrying the can, then they make sure that those who they insure are properly managing the risks and setting premiums, etc., etc.
Well, I don't
Why
know.
wasn't that happening in relation?
A quick answer. So in France, it's a legislated cover. People have to purchase it, and it is expensive.
But
In Australia, there's no legislation.
All right, so the insurers are forced to provide it.
On top of that, the insurers review all the structural drawings before they write the risk and then call for all the changes so that the structural design is down pat before the risk is written. And then during the construction process, the insurers send us, inspectors there to inspect the buildings before they sign off on the progress claims. So basically, the insurer is controlling the whole construction process.
It's a marvelous discussion. We will thank our panelists.